SmartSpaces reported weak bookings on a sequential basis but posted best ever collections in the first quarter. Also, the bookings were up 14% on a YOY basis. They are working on 2 new plotted development projects with revenue potential of over 2,000 crore rupees. Kamal Singal, the MD and CEO at Arvind SmartSpaces, is joining us now to discuss the earnings fine print. Mr. Singal, good afternoon. Thank you for joining us. Well, YOY it's been good growth in your bookings, but there has been a sequential decline. Last 2 quarters saw run rate of more than 250 crore rupees or 200 crore rupees. What is the sustainable run rate now with these new projects also coming into your kitty?
Yeah, good afternoon, and thanks for having me on the show. You're right, on sequential basis, the numbers are looking a little weak. But real estate as we know it, a lot of sales depends upon the new launches. And this year, as it is planned, the launches are a little back-ended during the year. And in the coming years, we'll start seeing quite a few great launches, including the ones that you just talked about, the new ones. 2 of them we signed just recently in Ahmedabad with the top line potential of around 2,300 crores. But all in all, I think we are on track to show the kind of growth that we've been showing. Last year, we did 800 crores of fresh sales per se. And historically, we've been growing at a rate of around 25 to 30% in almost all the important parameters, including the fresh bookings. So this year, we are confident and we are hopeful that we should be able to maintain that track record. And in the coming quarters, through the new launches that are planned already, we should be able to clock the same run rate of around 25% growth over the last year's overall bookings. But yeah, quarter on quarter, it fluctuates really depending on when and how we launch the new projects.
Okay, but for the full year, booking growth should be 25% plus. How many launches, sir, in Q1? Did you launch any project at all? And how many in Q2, Q3, Q4? Yes.
Sure. So Q1 we didn't launch anything. In fact, the entire sales of around 135 crores was sustenance sales. To that extent, we are happy about the momentum in the sustenance sale. Going forward, we intend to launch anything between 4 to 6 projects in the remaining 3 quarters of the year, and that should make up for everything that we've planned for the year as a whole.
Okay. Can you give us a sense of the new projects that you entered into? What is the execution timeline looking like? You have a JV here as well in terms of revenue sharing. Will you be putting in more capex? When will it start coming into your books?
Sure. These 2 new projects are both in Ahmedabad. They are very large horizontal projects which will comprise of plotting, villas, recreational products like golf courses, etc., etc. And there can be some element of institutional development as well out there. They span more than 700 acres. The first one is 500 acres and the other one is 200 acres of overall development. As we speak, there is a very hectic level of activity going on in terms of designing and bringing these projects to the market. One of these 2 projects should be hitting the market in anything like 2 to 3 months time from now. And the other one, the bigger one, 500 acres, should be hitting, at least we are targeting to hit the market by end of this year, maybe most likely in Q4 of this financial year. So that's how the plan is.
The overall potential of these 2 projects combined you've shared is 2,300 crore. But considering you have only a 50 to 55% revenue share in this, we should assume only half of the revenue is accruing to Arvind SmartSpaces, right? About 1,150, 1,000, 1,200.
Yeah, as far as books of accounts are concerned, this entire top line will come into the books of accounts of Arvind SmartSpaces only. So the entire 23 should be coming into our books. And the margins, etc., that we talk about are generally talked about in the context of this entire amount, the total top line of 2,300 crores. To that extent, this entire 2,300 belongs to the books of accounts of Arvind SmartSpaces itself.
Okay, all right. So that, but that 50% and 55% revenue sharing that you have spoken about in your press release, what does that mean when you say 2,300 crore rupees will come in your books? I did not understand that.
So in the context of project overall, this 50% goes towards the cost of land per se in the overall scheme of things. That's get booked like that. So that's how it is.
Okay, so total potential, top line potential is 2,300 crore rupees, and that is something that will come in your books. But when you talk about 50% revenue sharing, the other 50% will be the costs that will be incurred on the project.
And the margins. Correct. So other 50% basically is towards the cost of development and the margins thereof for us. So if we are configuring, for example, a project at 20% margin, for ourselves. That means out of 2,300 crores, maybe 460, 500 crores will be the margin at EBITDA level for us. And the balance will go towards development and land.
Okay, all right. Last question quickly before we let you go, a little short on time. You had spoken about land acquisitions as well. Any deal in the offing, the kind of expansions that you're looking at, will it be vertical or horizontal?
Quite a few, really. I mean, this year we intend to spend almost 1,000 crores in new investments and new pipeline of projects. That is very well underway, and quite a few exciting projects are coming our way. And they will, of course, comprise of both horizontal and vertical, and they will be in the cities of Bangalore, Ahmedabad, and Pune, Myanmar, etc. But very exciting pipeline out there. We should be able to announce a couple of things very soon.
Okay. We'll leave it at that. Thank you very much for joining in. There's Arvind SmartSpaces for you. We'll slip into a very